Hi, everybody. We'll start a minute earlier because I had a black screen. I didn't notice it. How's everyone doing? How you doing, Ren, Brock, Kevin, Alexandra? How are you? So yesterday I was talking about Euro Pound, and luckily it's going my way. So here's a weekly. I know it's only Tuesday, but we're under the 2 week off number. It failed right from here. If you recall last week, one of our charts of the day that Blake did showed this candle and a potential breakdown. I considered this little candle here and the recovery we had Friday like a hope candle. So we take out these lows. If you can see these lows right here, it'll make it easy. Oh, hi, Jess. Let's call it right here. There's a lot of space underneath it to the moving averages around 87, 70. Hello, K, J. So we'll see what happens. Thursday's going to be a big day. Blake was talking about it in our meeting and brought it up yesterday about Powell may make a statement about inflation that I read an article that Forex Gal sent to me that it'll be the opposite of what Paul Volcker did in the late 70s, early 80s when he started tightening, leading to a recession to wring out inflation. This is going to be the opposite to uh, increase the mandate for inflation to let it run hot for a while. I don't know, you know how skeptical I am. I already think it's hot. I don't know if I need more inflation in my life. I think it's only going to squeeze people more because certainly with 10% unemployment, employers are in the driver's seat. Everyone needs a job. So I don't know if you can see a lot of pay increases. So if we have inflation and income remains stagnant like it has for decades, it's going to make life more difficult. I think the Fed is saying this because then when it happens, they could say they planned for it, right? They say, well, when inflation gets hot, they could go, well, that was part of our strategy or mandate to let that happen. So we'll see. Anyway, it's going to be very consequential for the dollar. You know, maybe it'll be a sell the rumor, buy the fact, as the Dixie is under pressure again. It's trying to hold that false breakout here. Needs to get above. Yeah, that's going to be part of it. Everything's going to cost more. Think we already have it, except maybe in grains, but I don't know. You go to the store, it looks like commodity inflation to me. So Dixie needs to get above 94 to extend this as a potential bottom for a bear market rally. But I was talking to some traders, and I really didn't like where it bottomed. Look at this RSI reading here on the 2 hour and down at 20. So we'll see. Are we going to get one more? Yeah, it's the most everything I have ever seen. Max W on the S&Ps. So we'll see. Talked about crude making a new high. Looks like we're getting closer to that reality. Here's the high. It's up here at 43.50. So we're about 60 away from that happening. That's something that I'm going to be monitoring pretty closely once a new high comes in. Yeah, and the N, uh, maybe this is a fade right here. It's turnaround Tuesday. I think it might be worth a shot. See what yields are doing here. and yields are up, but maybe this is going to be a failing rally in yields and we get this in the 10-year instead of going right to new highs, and we get a similar move in US dollar yen. Only position I really have on right now, it was my highest conviction call or trade coming into this week is EG. Anyone take that yesterday? I think the key to agreed with me, it's one thing to agree, it's another to do it. Did it. Okay, congratulations. And let's see, S&Ps, oh, what a surprise. New highs, RSI over 70. Good morning. One thing I did notice in NASDAQ, it came off much more aggressively than the S&Ps did, but look at this RSI reading. I can't short it here, even for a scalp. But if we rally to new highs this time, and it's under 70, there could be a scalping opportunity on that. Let's see here, the 4-hour. Yeah, the 4-hour to 15-minute. Yeah, I'll be taking a look at this at new highs. So I'm going to start the interview about 10 minutes early today. I have to handle a medical situation. So this guy that I'm having has a real good reputation, and he was with all, had a great journey. It was with Jay Aaron. I remember when I was on the floor, short. Um, Jay Aaron was an arm of Goldman Sachs, their commodity arm, and it was really well respected boutique commodity operation at Jay Aaron. So stick around for this interview; it should be pretty good. And with that being said, I'm going to TO it to Blake and get Blake's views on continued dollar weakness and the pound outperforming euro today. So thanks for your attention. And
Hey, Coach.
I'll be around. Hi, Blake. How are you, buddy?
Good. Just to be clear, so everybody knows, you're because you said you're going for medical reasons for
Oh,
for
yeah,
an appointment, but it's not for you.
yeah,
And
yeah.
and we'll
I'm
see you
okay.
back here. We're going to see you back here on Thursday, right?
That's right, buddy.
Okay,
I'll
good.
be back
Okay,
in the
just want to
saddle.
make
Okay.
sure because people start to worry about Dale. They're like,
Well, because I'm so old, you never know. You're
well,
right.
I know when you're old and decrepit like yourself. I mean, things happen, and you get worried and stuff. So
I'm a fragile, tough old
you,
bastard.
you are fragile at least. But anyway, but I know
Emotionally, more emotionally than physically.
you are definitely emotionally fragile. So what I really would like to do here is get the analysis done for you guys this morning because I know you got to start your interview a little early, and heaven forbid we take away Steve's talking time because if
Yeah,
that happens,
don't do that.
world ends after that. No, I'm joking, Steve. I know he's listening in. But what I wanted to do is just get some of this analysis out of the way. But let me just show you something with the yen pairs and what happened with the dollar yen overnight. So the dollar yen's ripping for a couple of reasons, right? You had it. You had yields going higher. Bonds are selling off. Yields are going up. Risk appetite stronger. Stock. I mean, even the S&P hit a new high again. Sorry. Now, what's interesting about that actually is the Nasdaq did not hit a new high. It did not hit a high from yesterday's spike high, so which we can talk about as well. But then, everybody was thinking, oh, well, the market's getting a little lopsided with Abe and his health, and everybody's started buying yen yesterday. Well, maybe he's going to stick around for a little bit because we're not really dealing with that right now. But just moments ago, uh, was announced that he is going to have a press conference on Friday. he's holding a press conference now. Obviously there's some speculation around there that he might be throwing in the towel and bringing in a successor. I don't know about that, but the reason why this is all a big deal, because and I was trying to explain to the traders yesterday, is because one of the reasons why the yen had weakened so much way back here. Let me pull up a weekly chart. Back here in 2012, and these big moves right here is because of Abe's three-headed dragon approach. He called it a three-prong approach, I think is what he did. But
The
but
arrow policy, if I remember right, Blake.
What?
I think they were calling it a 3-arrow policy. If I remember right.
three arrow approach. Yeah, something like that. Yeah, something like that. I think you're right, Steve. And we had this great equal leg move, and I remember everybody just trying to short the hell out of this thing in this move, and I'm just like, yeah, good luck, good luck. I mean, I was actually long, but I just remember everybody on CNBC, any currency person would come on, they're like, yeah, I'm going to get long yen. And I'm like, you're going to get run over. I just remember it vividly. But this is when Abe was first elected. All right. And so people speculate that, if because of health conditions, if he steps down, then the yen may strengthen, and it may. But don't expect, the dollar yen to go back to 80 either. Anybody who comes in as an Abe, if he is truly dealing with health issues, and I mean, look, if I was prime minister and I had health issues, and let's say I knew I only had a few months to live, or maybe a couple years to live, I would be like, dude, I'm going to go enjoy the rest of whatever I've got left. Somebody else can take the reins here. I mean, that would be maybe that's me being selfish, but it's like, if you only got one life to live, and you've got a few months left of it, or maybe a couple years left of it, go enjoy after, guiding Japan for the last 8 years or whatever the case may be. But anyway, that's just my opinion. But if you think that all of Abe's policies are going to be undone in one fell swoop, I don't believe that. However, would the yen strengthen as a result? I think it would, to a certain extent. We could see the dollar yen back down at 10, maybe 102, 100, as people start to speculate that it might unwind some of his policies in the past. I think that might actually be the case, but don't expect the dollar yen to head back to 80 is all I'm trying to point out. Okay, now one of the things about the dollar yen, if you haven't noticed, is we ran right up into channel resistance. We've had this chart up for, I don't think I've changed my drawings here for a couple of week or two. I think I adjusted the lower trend line. But 106.50, you got resistance right here, and possibly a head and shoulder pattern developing. Oops, shoot, I didn't want to grab that. I did not want to grab that fib level. Let me just move that back. Okay, so I mean, you might have a little head and shoulder pattern developing. You guys know I don't like to play head and shoulder patterns like this, but that doesn't. Just because I doesn't mean the market isn't looking at it. So, I mean, you got a head and two shoulders here. People might start getting a little bearish around these levels. And matter of fact, since I have the bias chart up here, I might as well just go ahead and jot down the numbers. I do think that we're facing some resistance. So let's figure out what that is. So the 78% retracement is right here. 106.63. Channel resistance roughly could be there. Whoops, it could be there as well, depending on how you want to draw this. I was just trying to be more parallel. So keep those lines completely parallel. But I would say 106.65 is resistance today, and it's horizontal resistance. So 106.65. And you guys know I've kept us in range because I believe it is very much a range bound type of situation here in the yen. Intraday support. I mean, I don't think we're going to see 105.30 again today down here. But let me just also state something I just said in our chat room. So just so you guys know, a few minutes ago. And when I say chat room, for those of you that aren't aware, the Forex Analytics chat room, this chat room right here, this one that we're all chit chatting around in. Okay, this one. Okay, one of the things I just said right here, and you can read it. So between now and then, we should see the yen leak a little, which means the world have the word may have gotten out what Abe is going to do, because we don't know he's stepping down. We just know he has a press conference on Friday. So the point I'm trying to make there is, between now and Friday, you might start to see the yen move a little bit. You might see it weaken. You might see it, you might actually see it weaken, and the yen pairs go higher because word's getting out that he's not leaving. But if word gets out that he's might be stepping down, we might actually start to see the yen strengthen before Friday. So that's why we have to be on guard here with the yen, in my opinion. All right, so support, and that's in the Forex Analytics chat room for those of you guys. It's located right here once you're logged in, right there next to your avatar. See it right there. Okay. What was I going to say? So support intraday. I mean, I think intraday we might find some support at 106. But I really have to write down 105.30 is key. I just don't think we're getting down there today. But I may be wrong. I mean, hell, what do I know? I mean, look at stocks right now. I mean, the Nasdaq just posted a lower high, right? Yesterday, spike high. I think if you were around, you probably saw my tweet that I tweeted that, so we hit a lower high overnight. Now the S&P hit a new high. Okay. But the Nasdaq didn't. So, let's say the markets start, selling off a little bit here. Maybe the yen pairs do, pick up some steam, and the dollar yen falls a little. It could be. I've seen weirder things happen. Okay, let's go through the analysis here as far as all the majors go. So the euro, one of the things about the euro is we have made a lower hourly high. And, if you get Forex Analytics, or you have Forex Analytics and you read the analysis here, yesterday, or this intraday update about an hour ago, says an hour ago. Once again, the euro dollar may be stalling ahead of the 118.50 level, possibly carving out a lower high intraday, as yesterday's highs were near 108, 118.50. So you can see we're making a lower high. And so that puts at risk the lows again. Okay, which yesterday's low was 117.50. We have a little trend line support right here at 117.30. And then obviously key support is 117.10. So what we'll write down right now is 117.50. Well, we're going to write down 117.10, and then 117.50 is support. I still think we're bullish. I think you have to come at the euro with a bullish, more of a bullish stance. But I do have to mention that false breakout has me a little scared being long the euro, even down here. I mean, I might actually try to get long the euro on a dip to 117 before Thursday if we get down there. But I'm not. I'll keep my stops tight, and I'm not going to risk a whole lot. That's my attitude when you got a false breakout that you're dealing with. So resistance intraday 118.50, and then obviously the 618 here at 118.86. So I'm going to write those both down. 118.50, 118.86. Still bullish. Cable. Another situation where we might have a lower hourly high. Okay, and actually 50% retracement comes in there. So 131.50, 130.50. Okay. The cable, I'm less likely to put bullish, because this failure at 132 has really got me worried about the pound. And also, it's not just the 132 failure. It's the big trend line here that we'd broken. It's just like false breakouts scaring the heck out of me. I do think that a move below 129.50 is going to be really it'd be bad news for the bulls. Okay. Aussie, still dealing with the same thing in the Aussie, right? We still have this channel. Very flip-floppity moves around here. Channel support is going to be 71.35. But 70.75, that's key, right? 71.35 is support. And then resistance, I mean, 72.23. What do we have written yesterday? Hold on. It's their bias chart from yesterday. 72.25. I mean, you know, because there's 72.23. Yeah, I mean, that's just, I think I just rounded it up, which, yeah. Right. And, you know, as we had yesterday, I still believe it is bullish while we're, you know, above that 70.75, but it's starting to, you know, weaken a little bit. Let's go over to the Kiwi. So here's the Kiwi. As you guys know, 65 cents is key support. Resistance, 65.65, and I think it is 65. Actually, it's 64.90. Sorry, 64.90. And what did I say? 0.6565. And I'm going to keep it in range. I still think the Kiwi is underperforming here. Let's go into the Loonie. So the Canadian, we hit key resistance right here at 72.30 yesterday. I know we went to 40, but or the high 30s. I sold some of my dollar Canadian yesterday. If you guys are in the chat room, you knew that. I took some of mine off. I have a core position, but because I wanted to add back down here. But what you can see, we're channeling, but this is what's really important is the longer term channel resistance comes in just above where we're at. I mean, you know, so for a 4-hour chart, we're bouncing around between, you know, 31.30 and 32.30, or you can say 32.40 now. Whoops, that I want to do. So 131.30 key support, 132, whoops, 132.40. That's key resistance. Then beyond that is 132.70 or 65, which is really key resistance because that is, oops, that is big time channel resistance, right? And that comes in, yeah, I mean, 32.65, 32.70, you know, we break above that and, you know, the dollar Canadian turns bullish instantaneously. You know, once we break above that on a sustained basis, it becomes bullish. Okay, you know, let me get rid of this. We don't need that right now. Dollar Swiss. I think yesterday pretty much defined dollar Swiss the way it should look. Obviously, while we're below 92.40, we have to stay bearish. But notice we've got a, you know, possible triangle developing with resistance now at 91.40. This is bearish. Oops. And support 90. Well, it's, you guys know it's 90.50. I mean, we've been writing that down forever. So, but I don't know if we'll get all the way down there. We might only get to like 90.60, 90.70, you know, because this is loosely drawn. I'm just thinking we're consolidating. That's why I drew it yesterday. So it's, like I said, it's loosely drawn. We could end up doing this. We can end up doing that. It, you know, it just kind of depends. It kind of depends, like Dale's underwear. Get it, Dale? Dale?
Yeah.
Hey, somebody got it. All right, it's a bad joke. All right, dollar Norway. So 50% retracement held at 92, 92, 892.87, which is basically 893. So that 893 is your 50% retracement. And look, guys, this is a multi-month trend line that we broke. I went from, I told you guys, once we broke it, I'm going from bearish to range. Now, if we get above 910, it's going to turn bullish. Now, we have a lot of work to do to get up there, but I'm just saying, we get above that, and then that, I mean, you guys have watched the evolution of the US dollar Norwegian krona being bearish every single day for the last month or two, and then now starting to turn to range, and now it could quite possibly turn to bullish soon. So just, watch the evolution process of these trends change. Dollar index. As you guys know, we had the false breakdown. Dollar's starting to look very wedgy. Support 93, resistance 93.50. The dollar index is still bearish. And as you guys all know, while we're below 94, it is bearish. While we're below here, while we're below here, it is bearish. But that doesn't mean that we can't see counter trend moves. And that's what I think is brewing right now. Okay. Let me grab a sip of my coffee. Dollar Mexican peso back down towards really key support here. Again, big support down here at 21.85, 21.90. But yesterday we were capped at 22.04. So I'm going to write this 21.84, 22.30, and you just kind of got, as it dips a little bit, you probably play it on the long side down here, in its range. Gold, as you guys probably remember, 1900 is the big kahuna, big trend line, right? Right now it comes in, because it was 1900 yesterday. Today it's 1905, 1906. It's an upsloping trend line, so it's going to gain a couple points every day. So support now is 1905. That's key. Resistance. I guess we can write down 1960 again. I think that's what we had written down yesterday. It is still bullish while we're above 1905 though. Okay. We get below 1905, that's when it turns back to range. That's just because this is the all-time high breakout. You guys remember, right? It's right here, right where we're at, basically. But like within 2 points of where we're at, 1920. All right, S&P. So the S&P today is still bullish. We're still higher. And we've surpassed that 181% extension. This one here, this 161% extension, the near term one, and we're above these highs. So that means support now is at 3,400. Bullish. Resistance is 7,000. Just kidding. Just kidding. It probably
resistance. resistance is futile.
Is
Indeed.
futile. That's right. It is somewhere up there. 34, I guess 3478 would be the 161% or 261% extension of this small, hourly move, this one. But I mean, all right, 3450 right now, but that's minor. 3450, 34, what did I say? 3478?
10 seconds for data, Blake. Nothing super major. U.S. consumer confidence and U.S. new home sales. I'm just saying.
Okay. Thanks for that. I mean, we'll take a look here. Nothing's going to move the market until Thursday. So, I mean, we might see some bouncing around, but nothing major is going to happen. So here's the euro. Let me grab data flash. Remember, you guys get this with Forex Analytics. Let me move it out of the way here really quick. Okay.
Sorry, I meant Philly Fed. We got it. Let me find it. Sorry, I heard it in the squawk and then I didn't check the time on the data flash. They were talking about Philly Fed. Let me find exactly what.
Did I miss it?
Yeah, it was something that had to do with Philly Fed, not the obvious one.
I don't see anything major out of the
Philly Fed non-manufacturing regional business activity index 1.6, previous 0.7. Sorry, I heard it in the squawk and then I checked data flash and I didn't check the time in data flash. They meant something else.
Got it. Okay. Cool. Well, guys, I'm going to pass over to Steve because I know the interview is starting early. So here's your bias chart for today. Steve, Stelios, Dale, it's all yours. Dale, good luck taking your dealing with the medical issues that are not yours.
Okay, Blake, thank you very much.
Your family issue. We'll see you back here on Thursday then.
All right, partner. Good
hunting.
All
right. Thank you, and see you guys.
Thank you, Blake.
Hi, Stelios.
Hey, Dale. Singular.
How are you guys?
We're good. We're very good.
I once had scoliosis and antibiotic
was it the serious case?
Yeah, antibiotic. Not really. Antibiotic cleared it up.
Acute scoliosis. Yes.
Yes.
Yeah. So, very, very little to actually say overnight. The main thing to mention is more toing and froing between the Americans and the Chinese. If you recall, there was a lot of can I say hostility? There was a little bit of hostility from both sides regarding trade negotiations and how things are going. They were supposed to review phase 1 and they moved that. Trump said famously that I don't want to talk to the Chinese right now. But now apparently they did talk, and I think it was Mnuchin and Lighthizer, however you say his name, spoke with the Chinese vice premier, and they decided that things are going to be going. Actually, excuse me for just 1 minute. Okay, sorry. Can you take over just for a minute?
Absolutely. Yeah. And bottom line, we had more headlines today telling us that we shouldn't worry about it because the U.S.-China trade deal is going to move forward.
Sorry, I'm back. Sorry about that.
Yeah.
I thought it was an important call and it was not. So basically they have now spoken and they are saying that yes, we are going to meet the targets, but
I really want to see that happen, Stelio.
Ignore the fact that the pace is nowhere near. But
and we've already almost completed the 8th month of the 12.
Yes.
Yeah.
But like we've been saying before, they say this, they say that. In the end, they're kind of going to move forward somehow and do something. Will it be what they've said in phase 1 or phase 2 and all that? I doubt it. But they're just moving forward. And to be quite honest, I think they're using this this whole charade as an excuse just to put up a headline when they want to make things better when markets are down. They weren't down obviously yesterday, but they just like doing that, don't they?
I saw our friend Mark Yusko on CNBC yesterday, guys, and he used the metaphor just like there was never a trade deal. Everyone talked trade deal, and there wasn't one. He says the same thing about the vaccine. He said there is no vaccine for COVID.
Well, that's a
That's
big
his
discussion.
opinion.
Yeah, and I'm no specialist, but
For full
Either is he,
disclosure,
but
I
huh?
have for full disclosure, I have a meeting with Mark in 6 hours from now to
Yeah.
arrange him coming on
Right.
the next event.
That was the
So,
segue.
so I think most probably we'll get the chance of getting his input there.
Yeah.
yeah.
Yeah. So that's what he said. He doesn't think there'll be a vaccine for COVID.
Yeah, and you know what? They're talking now. People are saying, look, if it's 50% effective and you can use it, you have to take it every 6 months. They'll consider that to be a success. I mean, how can that be a success? I don't know, but
I mean, has there ever been a vaccine for the common cold? No. It's the
it
same
keeps,
family,
for
right?
the flu. Yeah, it keeps changing every year.
Yeah.
Yeah, your guess is as
Anyway,
good as mine. I'm
that's
not a
Mark
specialist.
Yusko.
Yep, and Mark
I
Yusko
hope
is
he's wrong. It's not. He hasn't been right about everything. So
he's
maybe
a
he'll be wrong
very,
about this.
very, very smart guy, and I
Yeah.
hope he's wrong. But
Yeah.
who knows?
To be honest, I'm a 100% pro-vaccine. So I've vaccinated my son, of course, with everything, and myself included. But I can tell you, as a fact, there is absolutely zero chance that I'm going to be trying that vaccine until several months past that. A big part of the population has tried it.
What? Not even the Russian vaccine?
No, I'm not Putin's daughter.
Yeah, I'm with you on that. Yeah, so otherwise, overnight's been very quiet. Risk assets keep going up, metal slightly lower, the dollar is slightly lower. Same old, we can go back 2 weeks and we're probably saying the same things on this webinar. So unfortunately, not very much to say, or at least nothing constructive.
I think the market is now waiting for the Fed stage. I mean, they know that Powell is going to, make substantial statements. There's a lot of speculation if it's going to be, just about, completely changing like inflation targeting methods, so on and so forth, or if it's going to also hint of like universal basic income. But everybody knows that something big should come out of his mouth, and I think that the market is trying to price in the, in essence, dovishness of whatever is coming, and then it's gonna try to weigh in what we actually got to see if it's gonna keep rallying from there, or if it's gonna pull back if whatever comes out of his mouth ends up being received as underwhelming. Because I mean, we know as a fact that it's the law of diminishing returns. I mean, the more everybody becomes dovish and the more they throw at it, the more the market needs to be satisfied and keep on rallying.
Yeah, and actually, it's interesting because the central bankers, they kind of, it feels like they live in a different world. They don't actually realize what's happening out there. You see, they've been using QE and ZIRP for ages now, for 10 years. And what do? They inflate asset prices, stocks, bonds, any real assets, real estate, all that stuff. Who owns all that? Who owns stocks and bonds? I was reading the other day that what was it? 80% of stocks in the US is owned by less than 10% of the people.
Yeah,
so
that's true.
who benefits from all that? Obviously, the 10%, and then the rest of the people. There, it's actually deflationary for the rest of the people, QE, because their disposable income now becomes less and less because it costs more money for rent, more money for everything they do, for healthcare, for education. So it's as if they don't get it. They use these tools, which, yes, in the very short term could work, but you're using them for 10 years now, and you're just accelerating now. I mean,
and the fun part is that they're even making statements that they want to try, they want to help in fighting income inequality, which is a joke, because if they can do something, is make it worse, as they've been doing it.
They're causing it. But anyway, that's another long story, and I just get angry sometimes when I think about what they're trying to do and how they're doing it. In fact, I think the only proper thing that they did to actually help the average person is to give helicopter money, the checks. That helps. Obviously, most people just go Robinhood and buy, trying to get some stocks or buy iPhones, but that's a different story. But that's, at least that way you get the money to the people. And don't get me wrong, I'm not for helicopter money. I think it's wrong. But if you're going to try and somehow get money to the people, that's probably the most effective way to do it. But
Yeah, from the bottom up instead of from the top down. The so-called trickle-down effect has showed that under the current economic environment, for many of the reasons you mentioned, doesn't really work because money doesn't trickle down this way. But in any case, as you implied yourself, the whole conversation is completely wrong because the best way to, in essence, fix the economy is let the economy function freely and let it heal from the severe wounds that it has already suffered during the many, many years that monetary policy is trying to fix all problems using the same tool, which is
yes,
absolutely impossible.
Absolutely.
Okay.
Anyway, yeah.
Let's
yeah,
go to
that's
the
it for
charts
me.
then. Okay. Let me see. So let me go over some of your questions. One case being we haven't had anything major happening in FX since yesterday. So Blake already covered like the major pairs, and given the fact that we've absolutely done nothing, Euro USD still consolidating in a range. Cable found again support in this previous triangle, trend line support. Aussie is still oscillating. In this ascending channel, just on top of like major resistance, so on and so forth. So, nothing really to say there. The DXY, which, I always begin from when we're talking about effects, is still trapped in this range. Somebody can claim that the false breakdown last week might be the beginning of a reversal higher, but in order for that to prove to be the case, we need to go over 94. Until that happens, there's no discussion to be had because there is no technical evidence that something is really changing other than the fact that we're slowing in momentum. Stocks keep doing their thing. Nothing is stopping them. Monitoring this ascending triangle can be an ascending wedge, but I'm very, very skeptical because we see the same situation. We still see major divergences on all indices, but that has been ongoing for a long time. That's why we've been warning that divergences are never a time indicator. They do tell you that something is brewing, and I do believe, for example, that the VIX, the next big move for the VIX is definitely to the upside. But who tells us that it can't take another 2 or 3 weeks or 4 weeks? Nobody. So the situation remains what is. Here's the DAX, for example. Another ascending triangle here, not as steep as in the case of the S&P. Definitely, as I've said multiple times, the FTSE is the weaker sister among the indices. But even in this case, somebody can make the argument that this recent consolidation is more likely to break to the upside and attack the confluence of resistances at 6,600 than break to the downside. Here is the Nikkei. We had been talking before I left for vacations about this Nikkei triangle and that it was most likely to break to the upside. It did break to the upside. It back tested it, and now we seem to be moving higher once again. Another index I was showing in the chat room before I left for vacations was the Australian one, because it was testing this confluence of resistances from this flat top triangle and the 200 daily moving average. Still no news from from it. Still testing the same area again and again, unable to break through it. But on the other hand, it's not that the bears have actually managed to take control of it. So I still think that from a technical perspective, there's it's more likely that we're going to end up pushing through than anything else, at least for the time being. Nothing seems to be changing for now. So you need to respect the larger trend, like it or not. It is exactly what it is. Now, as the stock indices keep moving higher in a fashion that's not really, doesn't really display strong momentum. It's definitely, this it's definitely bullish, the fact that we have a continuous bid coming through the market, but it's not that you can call the move explosive. I think that this is also what keeps crude oil bid in this ascending triangle. If we do get an explosive move from stocks, because keep in mind, what I didn't say before is that this type of price action we've seen many times in the past, and sometimes this type of price action evolves as follows. It first has to go vertical, completely vertical, the market to become, really totally stupid. Examples, a good example, a rather recent example is this period that peaked at the end of January of 2018. For those of you that were here and remember it, let me zoom in so you can see it. We had the market being in a relentless move higher, and everybody was trying to top pick the market because it was overdone. But before it actually topped, it went literally vertical. So this market has really started reminding me of that. So I wouldn't be surprised if the market first has to go vertical and get everyone that's left being bearish capitulate completely and be like, throw in the towel and be like, okay, I'm done. I mean, I'm not even going to attempt being short again before it actually reverses lower. Now, if that's the case with stocks, which is a likely probability, I believe that this is also going to help crude oil do something equivalent. I mean, first, get a temporary breakout from this triangle, perhaps a few days of very strong up move before actually failing and producing some type of a deeper corrective move lower. Now, the recent weeks, we've seen the gold stock correlation, which was rather good, breakdown, which it's natural. I mean, the opposite was not really natural. Although, to be honest, they have a common driver, which is inflation. I mean, inflation will drive both gold and stocks higher. So we've seen this decoupling, and it's still uncertain what we're seeing here in gold and silver. I mean, is it some type of a broad corrective formation unfolding, or we need to see another leg to the downside? This remains to be seen. During the past 3-4 trading days, it's not that we've seen something big, but given the fact that we had this major breakdown and this massive candlestick following this recovery, I have to say that in the short term, the path of least resistance, in my opinion, remains to the downside. So from a risk reward perspective, I still see the potential for more downside in gold and silver. But that's just my short-term thesis, because nothing has really changed having to do with my long-term thesis, which is that it's almost inevitable for gold and silver, with monetary metals, to overperform the vast majority of assets. Now, let me go through some of your questions fast, because we do know that today Dale has to start his interview a little bit earlier. Question about platinum. Yep. Natural gas September and October. Please compare a range. I don't have the time to do this now. I can have a look at NGAS, though, and tell you what I told you yesterday. Yesterday, I closed my long position here. It was a very good run, and it might run actually even higher from here. But we've now satisfied the ranges extension, and we are testing confluence of resistances. So I would definitely start being a little bit careful here. We might get a reaction, even if it ends up temporary. And for the other friend that is asking about platinum is still holding this ascending channel trend line support, and as long as that's the case, there is no real reason for you to try to fade it. If we do break through, watch for 875. 875 is key support area. Let me go through. Dale is your guest here.
I
know you.
don't see Tony Greer. Are you in the house? I'm not sure what you registered under if you're here.
A question about the Nifty. I'll be more than happy to cover it as long as Dale is. Okay, Nifty still appreciating within this ascending channel. Pace has waned. But you know, there is still no bearish breakdown. I expected this to break down earlier, but the good thing is that it didn't produce any false breakdowns. So, you know, somebody had no reason to actually try to be short the Nifty because the Nifty has been, you know, strictly following the channel and has every single time held to testing the trend line support. What's the clear RSI divergence here as well? So I have to say that, you know, I would be very, very careful if I was long the Nifty here. I think, you know, we're getting closer to some type of a sharp corrective move lower than anything else. When that happens, I would watch for 8,830 and 10,550 as the first two areas of support. I think quite well defined from a technical perspective. Then hope everything goes well with the doctor's appointment. Good
He's
luck.
here, Steve.
Okay, then
All
go
right.
ahead. I'll stay with you until you
Thank you, buddy.
get him
Okay,
set up.
Tony, I'm promoting you to panelist and asking you to unmute. Welcome to Face, Tony Greer.
How are you guys?
Good, buddy. I read about you. You had quite a journey as a trader, you know, and I remember I dreamed of having a job with Jay Aaron and Company. They were such a boutique, top of the line commodity operation. You were fortunate early on in your career to be surrounded by pros.
I really was. You know, through my
Also,
market.
before we get going, Tony, if you want to share, are you going to share your screen today and show us anything, or just talk?
I was just going to talk only because this is my first time doing with you guys. I have I can be on video if you want to look at me. You know what I mean? Like,
no, that's okay. I thought we might talk about markets, but let's talk about your journey. And next time we'll get into
Dale. Let's
yes.
promote Tony so at least he can share his camera since he wants.
He's okay. I did promote him.
In order for him to
he's a panelist.
To share his camera, I think he needs to be a co-host. That's why I'm telling you.
Okay.
So promote him to co-host.
Okay. I'm making you a co-host.
And then he can
go ahead, Tony.
Camera.
You could use your video camera now.
All right. Let me see here. There
Steve's
we go.
my producer. All right, there you are, Tony. So is that your pandemic look?
Yeah. Let me just put let me put all these white screens down on my. Can you hear me okay?
Yeah, can hear you.
All right, great. I can talk about whatever you want. It doesn't necessarily have to be me. I have a strong view on the dollar. You know, I know that you're an FX technical, you know, basically you know, entity that's, you know, sharing stories like that. So, you know,
we cover everything. We cover everything. So you have a strong view. Are you a raging bear?
No, it's more in the dollar. I call it a lasting dollar bull, right? It's hard to shake me off of being a dollar bull because I just believe in that we're still the best center for investment on the globe, right? Our economy is stronger than the other economies. Our currency should therefore remain the reserve currency. And I don't think that there's any danger of that changing. While the dollar may fluctuate and trade, you know, from dollar index 90 to 110 within that range or something like that, to me, that's not really dollar moving. You know, I can use that as a barometer, an indicator for what it means to other markets. But for me, a 5 or 10% move in the dollar is just something that's indicative of something else going on. So that's kind of how I posture it.
Okay, the range bound, is that central planners keeping things in a range? That's their intention, to reduce volatility, take the currency markets away from traders?
Well,
What do you think?
it seems very much certainly, Dale, that since 2008, since we and then the rest of the world embarked on this hardcore QE plan, that we've been sort of taking turns trashing each other's currency, if that's fair to say. So
Yeah.
I do believe at some level that it could be, I try not to be too conspiratorial, but it could be somewhat by design that you don't see a runaway train in one currency strengthening versus the other currencies, right? It's just a sort of, consistent amalgamation of currencies weakening against gold, and
Okay.
precious metals and things like that. Yeah.
Okay. You think Powell is going to have some dollar moving news talking about raising the inflation target? I don't know about you, Tony, but I think they're setting this up because they know it's going to happen anyway, and then they could say they planned it, higher inflation. What do you think?
That's a very interesting way of looking at it, Dale. I've been writing, just recently as the Bloomberg Commodities Index has picked up with this rally in precious metals and the
Right.
rally in energy. I've been saying, this time around, it looks like we're going to see some serious headline inflation, and it seems like it would make sense given the size and scope of the balance sheet ad the Federal Reserve just had. So yeah, I'm kind of thinking that we're going to see it. And if they're going to presage it by saying we're expecting it, then yeah, it sets them up pretty nicely to be right for a change if they know that it's coming, right?
I think you should be on CNBC because you have one of the nicest workstations, office, nice, more professional looking than a lot of these guys on Fast Money and everything. And getting back to the dollar, the bulls have an argument about dollar shortages, that there's so much dollar denominated debt, there's not enough dollars to service it. It could end up creating a squeeze in the dollar during some type of major risk off, or maybe that's going to be the cause of risk off, emerging market economies that have all their debt denominated in dollars. What do you think of that narrative about a dollar shortage?
I respect that narrative. It's not my narrative, but it's out there. And I certainly hear it coming from well respected voices in the foreign exchange market. So I do very much respect that. I can't say that I found direct evidence of the dollar shortage. I do understand that there's so much dollar denominated debt issued around the world that there should be a natural bid to the dollar. I don't, I can't myself envision the mechanics behind a massive dollar short squeeze. Maybe that's a fault that I have. But like I'm consistently thinking that the dollar is range bound. I'm consistently thinking that it's sort of just either in favor or out of favor. And to me, it seems like, given the biggest economy on the planet just had a massive, we almost doubled the Federal Reserve's balance sheet. Obviously, we're taking on massive amounts of debt. To me, it kind of makes sense that the dollar got punched in the nose a little bit and had to, take a 5 or 10% pullback. I don't think it's anything that is a secular developing trend, though.
Okay, when it comes to the Chinese, Tony, everything is, we're like in a Cold War with them economically. And I've had guests that talk about using the dollar as a weapon by revaluing the dollar, that would be harder for China to cope with a revalued dollar rather than a weaker one. What do you think of that as far as using currency as a weapon?
Currency as a weapon is something that we can, I don't think we've really seen, in this landscape just yet. As you've said, Dale, with the Cold War certainly most obviously brewing between the U.S. and China. I think that it's something that's going to get even hotter as we get to or through the election, because I don't think that President Trump has levied his full response to them allowing the coronavirus to spread so widely around the world yet. So I think we're due for an even more intense Cold War, which
Yeah.
does lead you, which definitely does lead you to start saying to yourself as a trader, I should probably start thinking out of the box here in terms of what could go on in between the US and China. And so that is something that I'm, just watching as closely as you. If it's going to be the kind of thing where they start using the currency as a weapon, I don't think that they're going to find enough common ground where it's going to benefit both China or benefit China and hurt the US enough for that to be a realistic policy decision.
Okay. Okay. So are there any currencies that you favor in this environment? Talking about inflation, perhaps commodity currencies that could benefit from that, especially if things don't continue to unwind with China, perhaps the Aussie dollar, Kiwi, or
Exactly.
Canadian?
Exactly. I'm more focused on, rather than Kiwi and Canadian, I'm more focused on the Aussie dollar and the euro as a commodity bull here. So as you've seen, Dale, since, I would say, since, well, let's call it the risk trough in March, when the
Right.
S&P finally bottomed as a result of the coronavirus lockdown, I would say since then, some of the trends that have been widely apparent since the Federal Reserve levied their response to the lockdown is that metals have begun rallying, right? Iron ore is
Huge.
trading at an all-time high, driving, copper's begun rallying in
Yeah.
significant proportions finally. This is clearly driving the Aussie dollar. And whether it is in the euro, whether it's driving the euro or the move in the dollar rather and against the euro is what's driving commodities, is what I think. Either way, you have to respect these moves because the Aussie dollar, I mean, I talked to a lot of FX traders and they have all got Aussie dollar widow stories on the way up. They all took a shot to short it on the way up based
Right.
on the view that there would be commodity deflation due to the lockdown. And as you've seen, the Aussie
Oh,
dollar is bid only now in the inflationary side of the lockdown.
right.
So I'm really respecting that. The move in the euro, more so in the Aussie, but also in the euro, they do look like short-term trend reversals that we just saw. So I want to respect that move, and I'm not going to be a pig-headed dollar bear, but I'm going to say, yeah, I'm going to continue to say the dollar could possibly back off here. I'm not going to. I don't want to stand in the way of what's obviously huge FX traffic coming through selling
Okay.
dollars. So yeah, so I do think that I want to keep a close eye on the Aussie and the euro. It looks like they could be major reversals in the rearview mirror. And if this commodity breakout and headline inflation story that I'm trying to track right now pans out, then I think that those could be reversals, and you could see euro and Aussie just keep going higher. And so that's
Okay,
something
what
clearly.
if that's the case, then your original thesis of 88 to 110, would 88 kind of be your bull bear line for things have really changed and it's not just a range bound scenario anymore?
Yeah, I'd have to look back at the chart, Dale, but I do definitely have an all bets are off level, which I try to have with every position that I have, or view that I have in my mind or on my books, because as we all know, in 2020, nobody knows what's going to come up on the bingo card next. So yeah, I am going to absolutely, maybe re-question my view as a secular dollar sort of sideways to bullish attitude to something that I may have to change. But I really think that by the time we get down there, I mean, dollar sentiment is really negative right now.
Yeah,
And I know
historically.
that's, yeah, historically, but as you know, Dale, from following the FX markets for so long, sentiment isn't enough in
Yeah,
FX, right?
yeah,
With a stock that's got a 50 million share float,
right.
sentiment in a short position is enough to spike it, right?
Great point.
In the trillion, multiple trillion, gazillion dollar effects world, sentiment's just not enough. The flows are much more significant. So, with sentiment already is historically negative now, you get the dollar index down to 88.90, and you're going to have, Giselle Bundchen wanting to get paid in euro again. You're going to have all kinds of crazy stuff going on. And I think that might finally be the bearish capitulation like we've seen in the past. So I
Okay.
kind of look for things to get so negative and so washed out, then all of a sudden, like we say, in this world of competitive devaluation, next thing you know, all of a sudden the European banks will, the European central bank will start amping up its quantitative easing, and then the euro will take a hit. So I see it as something that is potentially managed between the G10, again, without getting too conspiratorial about it.
Okay, so talking about bingo, we have the elections coming up. Uh, if we have a result,
Yeah.
um, we know it's going to be contested. It's going to be the most dramatic attempt at a transition in power in my lifetime.
Yeah.
And I'm
Same.
wondering if you have any view. I've talked to people that said, stock market's going to be bullish no matter who wins the presidential election. Do you think that the presidential election is going to have consequences for dollar direction? And which by who?
Man, that's a loaded for bear question. I would say, let me start with this. The election wise, I don't think that having Biden versus Trump in the White House is going to change the Federal Reserve's behavior. And if I have to
Okay.
look at it, I'm going to say that that's what's driving markets. I have to keep in mind that I'm a firm believer that President Trump did put a lot of pressure on Jerome Powell at some stage or at some stage when Jerome took office, because Powell came in seemingly with a stiff upper lip, looking to, sort of normalize things. And I think President Trump started pointing out that, with the balance sheet that was constantly expanding under President Obama, there's no way he was going to allow the balance sheet to get shrunk on his watch. So I think that was a political implication, but I don't think Joe Biden would be in any way. I mean, I don't know if he has the mental capacity to address what's going on in the stock market, but I don't think that he would be reversing Fed policy in any way. So
No,
I'll answer.
Yeah.
Go ahead. I'm sorry.
But now he's saying he will make the dollar stronger. He really pays attention to markets. That's what he's saying now, as if people are worried about it. I think stock market people are celebrating a weaker dollar. That's a tailwind for all assets. Have you ever seen, Tony, markets be so basically what's the word I'm looking for? There's really no separation. Everything goes up together and down together, just in different magnitude.
Well, I'm kind of a stock market scientist, Dale, and I'd argue that we're finally in a different phase right now. Right now we are in the stock market wealth gap bifurcation phase, I've never seen before.
Right, the old economy, new economy. Yeah.
Yeah, because, for example, the NASDAQ is up 30% on the year. The Russell 2K is down 5% or something, right? So small cap companies are getting bludgeoned by this lockdown. And the big four, what we can call the lockdown companies in technology, are all thriving like they've never thrived before. So there is, that is one underneath a sort of story behind the story that, yes, while the Fed has expanded its balance sheet via QE, the stock market has largely been straight up into the right-hand side of your screen in a rally. So yeah, everything is going up, but in different proportions. As one thing that I would look out for is that the fossil fuel industry is utterly dead if Joe Biden gets elected. I mean, I feel like he wants to, take the whole entire country carbon neutral as quickly as he can. So I would fear for the fossil fuel stocks getting washed out to, utterly disastrous levels if he
Interesting. Yeah.
wins the presidency. But again, I think that it's the incumbent's election to lose, given the fact that I think the world actually recognizes that his response to the virus wasn't as bad as advertised in the media.
What do you think about the heartbeat we got in 10-year yields last week? The move from 50 to almost 70, and this pullback in yields to me looks corrective, and I actually think there's a shot for 120 or so in the 10-year. Doesn't that round counter to what Paul's saying, that we're not even thinking of raising rates? That maybe you go back as far as I do and remember a group called Bond Vigilantes. Are they coming back?
Man, we've been led to believe, Dale, that they've been left for dead somewhere, somewhere along the course of our career. And while I do not believe that that's the case, that they'll always be back at some level. Yeah, man. I mean, I'm watching the 10-year yield like a hawk, and the move higher to 75 basis points last week was in line with my view that we were going to see headline inflation and rates were going to have to ratchet higher because of it. In response, however, they just got body slammed again, so I'm concerned. And I'm not going to come out and tell you that I'm a big bond trader or bond risk taker. I use the bond market as the guide to my position and my views in the markets. I really do. I kind of respect it as a spectator rather than digging in and deciding that my view on interest rates is right and the bond market is wrong.
TLT just doesn't look that good to me right here, even this recovery. So, I just think it's probably the most contrarian trend idea out there, is that rates could go up. Tony, I'm sorry that I didn't have a full half an hour to work with you today. It's outstanding to talk to a guy that I could fire any question to and know that I'm going to get a great answer. And, you know, that's really a pearl. Sentiment isn't enough to turn the currency market. I'd love to have you back again when we have more time and when I have more time. And, you know, once you have an interview with me, you become my trading warrior brother.
Amen, Dale. Well, that was really, really great to hear. I'm honored that you think that way. And I'm also widely available right here in this room, in this office for you whenever you would like to talk about markets again. I absolutely love
Okay.
being on.
And the best way for people to, you know, follow you that see this and want more of Tony Greer?
Yeah, I'm editor of the Morning Navigator newsletter that I publish daily. You can find everything you need to know about me in terms of my background and product pricing on tgmacro.com.
tgmacro.com. And at, let me just check
At
Tony's.
TG Macro on Twitter.
TG Macro on Twitter. There's Tony. And I really appreciate you being with us today, buddy. And, you know, like we live in very interesting times. And it's great to have a dinosaur like you to hang out with for a while, I think. Even though I'm, you know, I already have one leg in the tar pit. You're not there yet. So,
no way. No. The
all right,
pleasure's
buddy.
mine, Dale. Thank you so much.
All right, everyone. That's Tony Greer. Good hunting the rest of the day. Remember, don't just count your pips, count your blessings. And I'll see everyone on Thursday. Thanks again, Tony. It was you opened my eyes, and I really love that line, especially for a counter trend trader. Sentiment isn't enough to turn currencies, by Tony Greer. All right. Thank you, Tony.
Have a good one, Dale.
All right. So that's going to be it, everyone. Have a